Stocks took a breather today after 2 days of triple-digit gains. Here are the numbers for the session. The Dow Jones Industrials declined 23 points. 17,828 was the close there. Nasdaq, however, added about 7 points to 4901. The S&P 500, it was down, but just by 0.02%. Despite today's small moves, stocks are working their way back toward their 2016 highs. But this market isn't the same as the one just a few weeks ago. Mike Santoli explains.
On the surface, not much is different. The corporate profit outlook for this year is about the same. The yield on the 10-year Treasury was below 2% then, and it's hardly budged. But oil prices have continued climbing, up more than 10% in the past 5 weeks to reach $50 a barrel. This has helped the market for riskier bonds to strengthen further, which offers better support for stocks. And shares of big banks, often viewed as a bellwether, are up nicely since the broad S&P 500 index was last at the 2100 mark. These factors suggest the market is on slightly firmer ground than it was in April. Perhaps the biggest change has come in investors' perception of the U.S. economy and the Federal Reserve's plans for raising interest rates. Consumer and industrial data have been good enough to support the case for a second quarter pickup in growth. And Federal Reserve officials have consistently suggested in recent weeks that another boost to short-term rates could come in June or July if the economic data keep improving. The Wall Street consensus had discounted this possibility, in part due to the impending vote on Britain's EU membership and the unsettled presidential campaign. While the bond market hasn't fully priced in the prospect of a rate hike within 2 months, it has moved in that direction. So, is it a good sign that stocks have been able to recover while odds of a rate hike have climbed, indicating investor comfort with the possibility? Or would markets react badly to another close call on rates, the way they did last September when the Fed stood pat and after the December rate boost? These are the questions that will likely animate summertime trading in a resilient market that now faces an obstacle course of high-stakes events. For Nightly Business Report, I'm Mike Santoli.